Explain it like I'm five. The day this episode comes out will be the day before Halloween, so I picked a spooky topic. What is a credit score and does it matter?
Ooh, spooky credit scores, debt. I think I can explain this one like I'm five.
Okay.
Because, not like I'm five. No, I can definitely explain like I'm five. I think I explained everything like I'm five. But
Mm-hmm.
can I explain like you're five? We'll see. Um, when you operate in the world of borrowing money, credit cards, mortgages, student loans, there is essentially a permanent record of you that's kept. And the analogy I'm going to make is this is like getting a grade in school. And you're just like you have a permanent record in school, and if you do something bad, it's on your permanent record. You have a permanent borrowing record. And this record keeps things like your credit accounts, your balances, your payment history, how many times you've had credit inquiries, like applied for new loans, public records, things like bankruptcies, judgments, and collections. And it's just in this like huge, massive list. And it's called your credit report. And it's kept on all of us that essentially have a social security number in the US. And it's like this big, it's actually free. You can pull up your credit report for free by law at annualcreditreport.com. This is not a plug. There is no plug. It's a free government website that is not to be confused with other ones, but you should never pay for your credit report. It's basically this big, gigantic list of all this stuff about you. And back in the day, in like the mid 50s, when lenders like banks were lending money, it was a kind of a chaotic experience. Someone would walk in, they wouldn't know this person. They'd try to analyze them and say, "Are you good or are you bad?" And we kind of already broke the topic of race this this episode, and you can imagine some people who had different color skin, some bankers maybe didn't think they were as good of borrowers, and so the concept of a grade, a score, was applied by basically processing all this information in your credit report and looking at 5 topics to give you a number score between 300 and 850. Why 300 and 850? I have no idea, actually. Maybe I should have looked up this episode, but it's like these silly arbitrary numbers. I think it should be between like 0 and 100. So if you have 850, that's like you're the best, like theoretical best human borrower, and 300, that's like you're the worst borrower. It was designed to give banks an easy, fast, less subjective way to identify what's going to make them the most money, i.e., is this person going to pay back the loan or not? That's what a credit score is. And it looks at these 5 things. Number 1, 35% of your credit score is made up of your payment history. Basically, have you made your payments on time in the past? That's 35%, the biggest amount. 30% is your amounts owed or your credit utilization. So, for example, if you have 3 credit cards with $1,000 limit each for a total of $3,000 of available credit, and you're maxed out on all of them, that's going to hurt your score. If you have $3,000 of debt and a $30,000 credit limit, your utilization isn't 100%, it's at 10%. That's going to be much better for your credit score. That's your amounts owed. The third one is 15% is the length of your credit history. If you're 18 and you've had a credit card for 2 months, that's going to hurt your score. If you're 50 and you've had a credit card for 30 years, that's going to help your score. 10% is credit mix. That's basically the different types of loans you have. If you only have one credit card, that's all you've ever had, you've never had any other loan, that's going to hurt your score. If you have a credit card and an auto loan and a student loan and a mortgage, and you've been like merrily paying these back on time the entire time, that's going to help your score. And the final one is new credit or new credit inquiries. Basically, in the past recent history, the last month or few months, have you gotten a bunch of new credit? That's going to hurt your score. Basically, that's saying if you got 7 new credit cards all at once and you're about to like dramatically change your, historical behavior, that's going to hurt your score. And so it's just those basically processing that big credit report, your permanent record, to give you a grade just like you get in school, an A through an F, or in this case, an 850 through a 300, just to give banks a number. That's what it is, why it exists. My opinion on credit scores is it's really a tool for banks to be more profitable. It's not a tool for you. The only reason it exists is to make banks' lives easier and faster and make it more profitable. I guess there's an argument for it to be less subjective, which I think is good for consumers. But if you're not focused on borrowing money, if you're not getting loans, a credit score means almost nothing to you. And I think because we are conditioned as students our whole lives, our whole formative years, to get good grades. When we grow up and realize these big government and financial entities have given us a grade, we just get obsessed with it and say, okay, I need to get a good grade. But it doesn't matter if you're not borrowing money. And it only matters a little bit when you are borrowing money. If you have like a terrible credit score because you never pay back all your loans, that's going to be a problem. People aren't going to want to give you money. But if you have like a 760 or 780 or an 800 or a 750, if it's in the good to great range, that probably isn't going to matter much, if at all. My own personal story is I have rarely borrowed money in my life. I didn't have student loans. I was very fortunate to have an athletic scholarship and help from my parents to get me through college. I don't borrow money for cars. I didn't own a home until I was 38. And when I did buy a home, I paid for it in cash with no mortgage. And so my credit mix portion of my credit score is very bad. It's like a couple of credit cards that I've had for a long time. That's it. But the rest of it's very good because I have high limits on my credit cards and I don't carry a balance. I pay it off in full every single month, never ever carry any ongoing balance. So I owe very little. I have great payment history. I have a long credit history and I have very few credit inquiries. So the other 90%, everything but the credit mix is very good. And my credit score was hovering around 780 or 790. I finally did get a mortgage about a year ago. And that actually helped my credit score, even though now I owe $500,000. Now lenders like me more because I'm a better borrower or whatever. And so now my credit score, I think, is around low 800s, like 802 or 805 or something. And it will probably slowly improve as that mortgage ages as well. And guess what? Even though that was my very simple strategy, I always keep my oldest credit card that doesn't have a annual fee. And then my newest credit card, I just use whatever one I like that has good points or whatever. I don't really get too obsessed with it. Like those two credit cards, pay them off in full every month. And then every once in a while, I'll request a credit limit increase to have my utilization percent be as low as possible. That's my whole strategy. And I had, an excellent score and had no credit problems ever. There are some people will say, oh, there's lots of things you need a credit score outside of borrowing money. There are maybe a few. There are things like insurance, renting, employment, security clearances that might be able to look at your credit score, maybe not. But still, if it's like, as long as it's not like 400 or 500, like you've been like recklessly stealing money from banks and not paying it back, you're going to be fine. And so my general advice is don't be obsessed with your credit score. Just do the simple things, pay your loans back on time. I would be obsessed with your net worth score. Basically, how much money do you have? All the money you own minus all the money you owe. And the less money you owe, the higher your net worth, because you don't owe people as much money. And so if you focus on that, that's what actually being rich is. And so spooky, Jen, is it spooky enough for Halloween?
You made it less spooky, so it's not quite so scary anymore. And you did a really good job of breaking it down. 5, I don't know, but good job. And one thing I noticed about credit cards in your statement is that it'll tell you how long it takes to pay off a credit card. Credit cards, I think, are very predatory in general.
Oh yeah, that's crazy.
And I don't know when this law came about, but that's why these laws are important, because they'll tell you how long it'll take you to pay off if you pay off only the minimum, and it'll be like 20 something years if you're paying like the $200 a month or whatever it may be, because they'll let you pay $200 a month and just let you keep owing forever and ever. And I think that those confusing aspects of having a credit card, they feed into your credit score. And also, even when you broke down the mix of what actually contributes to your credit score, I don't know how many people actually know that. So they might just be making silly mistakes. And even you breaking down your credit score, why would you not have a perfect credit score? I guess you said credit mix, but it feels like you are somebody who should have a perfect credit score, but you don't. So that kind of can tell you that a millionaire who's always paid off everything in full and hasn't really owed anything doesn't have an 850. It can give you a little bit of insight of how predatory that score is,
Totally.
Yeah.
Totally. And you're right. It encourages people, just like you said, credit card companies love if you make the minimum payment and just pay them that 20% interest forever. My rule with credit cards is if you don't treat it like a debit card where you pay it off in full 100% every month, cut it up.
Yeah.
It's so dangerous to balloon. We talk about the power of compound growth. If you can get 10% per year on your investments over time, you can become a multimillionaire. It's wild. And then if you can get 11%, when you start like playing with these investment calculators and you go from like 10% to 11% to 12%, it gets wild. 1% better returns like dramatically gives you more money. And so then you think about owing money, and you're not paying 5% or 6% or 10%. You're paying like 22.9% or 29.9%. Like they're just bananas numbers. And so I'd say like the worst thing you can do in the personal finance world is not pay your credit card bill off in full. That is like, you are in crippling danger if you're in that territory. And that's like your number one priority is like crush that credit card debt, do anything you can, like beg, borrow, not steal. I probably shouldn't be committing crimes here, but, work overtime, sell stuff, whatever it is, get out of that credit card debt, because that is like a devastating financial position to be in, to try to be clawing yourself out of this negative 29% interest. So like you said, if you're paying the minimum, that's like a 20-year debt sentence.
I'm like $5,000, $10,000. It's crazy.
Right. Assuming you never put another charge in your card, right? Like, exactly. And that's not how real life works. Real life works like this out of control ballooning of it. And so you really want to get back into the pay off in full 100% every month, or cut them up and just live, a cash debit card life.
Yeah. All right, cool. You hear that, 5-year-olds? Pay it off.
Yeah, hear that, 5-year-olds? Get out, leave kindergarten, come learn about your credit scores. Your parents will be very happy.